We are likely to reverse here and finally get a move up so that we can catch the big short that is coming afterwards. In this video, I'm going to do a deep study of this week's price action, and I'm going to show you where it's likely that we reverse to the upside. So let's get into it. On the daily, where is our order block? It's right there. Why is it right there? Well, this is where smart money on the daily are purchasing their orders. Why? Well, we had some liquidity here, and we also get this accumulation right here. So basically, these are two daily candles, right? Imagine it's in the hourly. What are we doing right here on these two? What we're doing is we're just building up liquidity, building up liquidity, building up liquidity. And then the manipulation move comes. Right here is where the banks are buying. Okay, so that is the order block. And that is where we are likely to reverse from. We have also swept all the liquidity that we have been discussing these past few weeks. And we are also very much here building liquidity that on the upside right here, leaving equal highs, getting flags swept, right? People shorting, stops there, equal highs, stops there, bear flag, stops there, right? So it's a lot of stops. Even on the daily, we can see that they're building up stops up here to be swept. So let's do a deep study of this week's price action. This is for you who have watched ICT and understand that his concepts work, but when you watch his concepts, he doesn't quite explain it logically enough for you to just grasp it and use it yourself. So that is what I'm gonna show you, hopefully. Now, the logic with this order block, I can start with, because it's important that you understand how the markets move. The logic here is that the banks still have orders here, and it's the banks that decide how the market's going to move, right? You already know that. ICT taught you that. Now, he didn't tell you how to understand where the banks are buying from, and that's the hard part. Basically, you just got to see where do they manipulate, where do they build up a bunch of liquidity so that they can buy, right? And that's the hard part. But that is what I'm going to teach you in this video through the deep study. Okay? But basically, here they bought. Thus, it is likely that we are going to get a move up from here to sweep at least this high, but most likely this here as well, which is a market maker buy model. Okay, why? Well, because we have been building up a ton of liquidity here. Right now, the big move we know is a big move down. That's what the banks want to do, right? We want to take it down here in time. To do that, they want to be positioned, and they already did this here through building up a ton of liquidity here. I want to show you this before, but imagine the banks, double top, stops, double top, stops, right? None of these moves up here swept this high. Boom, big move down, AI crash, bam, stops. Nobody sweeps this. So where are the retail stops? Right there. The banks sweep those stops. They are now in the market. And what happens? We get the real move, right? Build up liquidity, manipulate so they can fill up their positions, big move. That's how the markets operate, okay? Now, the big move we know is down. So what do they have to do? They have to build up liquidity before we get the big move down. Now, where do we do that? As previously stated, is right here. So the move up here will be to sweep these stops so that the banks can position themselves for the big move. Okay? Does that make sense? Please comment below if this makes sense or if you need a deep study on this. A private, not private, like where I specifically teach this. Because if you understand this, how the market liquidity operates, I mean, you've come a far way, okay? Because that is everything that matters, really. If you understand liquidity, you're set, okay? But yeah, so try to understand that. How do the markets engineer liquidity? Where is it? Okay, let's look at it from a retail perspective. 4-hour chart. Go. Well, that's not the 4-hour chart. There we go. It's this right here. So basically, how we look at it when we see where the liquidity is engineered. What we look for is patterns. We look for trendline breakouts, and we look for double tops. That's what I look for mainly. Take notes if you want to learn. Now, here, what do the retail see here? They see a double top, right? There and there as well. They see a trend line, so they go short there, stops there. They see a move up into this previous resistance again, stops there. This also aligns with this move here, which if we look at the hourly, we see this is resistance here as well. So if you don't think they short from up here, at least they short and put their stops there. So liquidity there to be taken. They put their stops here. We have 2 more stops there, right? They leave stops below this trend line. What do retail do when they see this trend line? They go short. They put their stops up there at the safe double top, right? So again here, trend line, here, stops up there. They got swept at Friday though. But you understand the memo, okay? This is how they engineer liquidity. They do these fake moves so that retail keep shorting, so that when we then do get the big move that we are going to get, they can get in their positions and they can catch the real move that is like going to happen soon. Now that you know that, how they engineer liquidity through patterns and stuff, let's do a deep study. Start on the hourly. Best setup of the week, in my opinion, is this one right here. The London after this liquidity build update, which we had on Wednesday. Now, why do I like this? We didn't sweep this high here, right? Well, it's not necessary because we've already got enough liquidity to enter. Basically, we get this fake flag, stops taken there. We get this, we have many stops flag there as well. Resistance there. So a bunch of stops here, up there as well from those two. So we sweep that. So now we have liquidity from once. Banks can go short here. Banks go short above these stops. And then we get the third one. Right? Where's that? Is right there. Okay? And if we look at lower time frame, it's when we sweep all of this. I'm going to get there soon. But you see all these equal highs here. So we build up a lot of liquidity. So basically, the banks don't have to sweep up here because we already have so much liquidity. And that's the hard part to understand. Which liquidity do we need to sweep and not? And that's screen time. I could screen time is the best teacher there. Take notes every single day and just watch. Okay, it's the best advice I can give. But basically, let's drop down to the 50-minute. So we anticipate the move to begin at London after a liquidation or liquidity build-up day before, which we beautifully had. Okay, see this day here, purely just building up liquidity. Okay, then during Asia, we get even more liquidity built up right there, right? All these highs, all these trend line lows here. What do they do at each of these highs? Retail, they go short. They go short, they go short, right there, stops above there, right? Trendline breakout, stops above here. Basically, they just manipulate retail into going short, okay? Well, what happens? We sweep their stops, okay? So now banks are in the move, okay? So they don't have to go above these because they already have enough liquidity from all of these, this engineered liquidity I said before, and this as well. So now at 8 o'clock, that's when we are clocked in because that's when London opens and when the move is anticipated to begin, because that is when the manipulation is likely. So what do we have here? This purple here. Think 1 second, what could that be? That's the order block on the 5-minute time frame. And why that is because it's the part of the move where the banks buy, okay, on the lower time frame. No, sorry, where they short, okay. It's this entire move is just taking out more stops so that the banks can go short, okay. So now, because this move away so fast, we have many stops up here. No, we have many bank orders up here left. So the banks went short here, but they did not have time to fill up their entire positions. So what do? We go up here again so that the banks can fill up their positions. Okay? So that's what's happening here. You see how it's just building stops, building stops, building stops, and even more stops right there. Basically, it's just allowing smart money to buy. But it's illogical for price to go up above here. And how do we know that? Because they already have enough liquidity here. And nobody in retail has their stops there, is the main reason, right? Who in retail went short there? Nobody, because they all had their short positions here, going short with their stops above there. So retail are already out, right? And for those who went short here on this double top, they put their stops above that one, right? This low there. So it's illogical for them, or, well, nobody in retail would dare to go short then, again, right? They're out of the game. So there's no liquidity above there to be taken, okay? So it's illogical for price to go above there. Now, what do I look for when we enter this order block? I want to see inducement on the lower time frame 3 times. I love that. Now, what is inducement? Inducement is basically a fake move that triggers retail to go, well, in the wrong direction so that they miss the move and they put their stops so the smart money can catch the move. So where's one of these pieces of inducements? We have it there. Now, 3 times, it's just like, it's not something very important, but as a rule of thumb, as a beginner, you can have it because then the banks will basically have been able to fill up their positions in the order block. But of course, it's gonna vary for the situation, okay? But if you wanna make a setup or like a rule with how you entry, then 3 times can be good. Okay, but back to it. So where's the inducement here? We get this trend line here, and we get this breakout. So retail goes short, stops there, taken out once. Now another trend line, they go short again, stops there, out, right? This is how retail trade. And then we see this one here. See that little cheeky move there below that trend line? Whoops. Stops above there, out. Okay, that's 3 times. So right here at 8 o'clock, that's when, or 2 o'clock, sorry, 8 o'clock my time, 2 o'clock New York time, that's when we want to look for our setup. And we got it on the 1 minute. So we had this this last manipulation move. Now the thing with tops trade, well, it's I trade with Top Step, but Trade08 is my broker. It's that the positions they disappear after the trading day. So I'm on my demo now, but basically I can't show you now because I didn't take screenshots, but I can explain the logic. So we wait for the setup after 2, and we get this last piece of inducement. The first one during London is important. Usually we get one during London as well, or during the new session that begins. So this is the one that we got during London. Now, when people go short below this trend line here, and they put their stops right there. So that's where I went short. Stops above there. And then with our anticipated higher time frame bias, I mean, you just ride along. I took right there. I took off half the position because this one here was an order block. So to me, we also engineered a lot of liquidity here, obviously. A lot of untapped liquidity. Trend line here, broken, stops below there, equal lows, equal lows, equal lows. All right, so we have many retail stops there. So I thought that it's quite likely that the banks are going to stop there, right? But yeah, and we kind of did, to be honest, we did. And I'll explain why. Because after that, after we swept this low here, what does the bank start to do? To analyze this entire thing that happens afterwards here. Does this move here seem like it's got a direction? Or is it just liquidity build-up? Maybe it's just a market maker buy model that's being formed, right? Why? Well, look, let's go to the 15-minute time frame. So where are we? Right here. Now, this all here, retail short, retail go short, stops above there, boom, trendline breakout, stops, trendline breakout, stops. Like basically this entire move, it's just engineer liquidity, right? For the real move to happen later on. Now, I'm going to be honest, I was wrong here. I thought that this was all that was necessary for banks. So I didn't trade this at all on my reel, but I was wrong on my paper. But what I was wrong about, why I didn't trade is because I generally just trade the 9:30 manipulation or other time manipulation. And this one here was just not in the right time. Therefore, I didn't take it. But he wanted to sweep this one high as well. And something I think is interesting about they went for this specific one is that it's the first liquidity that was formed after we swept the main low that we were targeting during London. So one study that I can take from that is we went into a liquidity building state after we hit our target, which was this one. That was the liquidity that was relevant for the market maker buy model that this entire move was. So what do I mean by market making buy model? Basically, that's just when we engineer liquidity for the smart money to be able to move in that direction. So we build up liquidity, we build up liquidity, we build up liquidity. So all of this is just for smart money to be able to take price in that direction as a manipulation so that they can fill up their shorts and begin the real move, which was towards, where was it to? Well, it was right towards that low, right there. But yeah, that was the best setup that we got. And some of you probably are sitting with the question, well, why didn't you sell it right below there, right? How do you know that it's going to go further than that low? Now, that's a brilliant question. And I'm going to try to explain the logic in this as simply as possible. Basically, we have triggered the short here. Or you know what? I'm going to explain this in the dollar because it's I think it's easier. So I'm gonna go to the monthly. Right. So this is just such a good example. So the dollar is quite likely, in my opinion, to be going towards down here. Okay. Now, why do I say when we have so much liquidity here with these double lows, right? Retail went long, retail went long. We have a trend line, they went long, stops. Why would they want to push price lower than that when we have so much liquidity? Well, the thing you have to understand is when we manipulated up here, what's the logic in doing that if we're just gonna sweep the same low that we manipulated from again? It's pretty illogical because the real move, well, then we would just be going like this all the time, right? We would be going, okay, we swept these lows, now let's sweep the highs that we formed, and now we got some more liquid, right? We got to understand where the higher time frame target is, and that's something you do with screen time. But yeah, basically, we get this manipulation move. So this is all just to build up liquidity here. With these double tops, stops there, trend line, stops there. This as well, you can, well, that's the short one. But basically what I'm trying to say is, sorry, I got a bit off track here, is if we build up all of this liquidity only for us to go right down here again, why would we do that? It's illogical because then we wouldn't have to do so much manipulation and liquidity build up, right? So the banks would just do this then. They would have taken this low here, even lower. They would just have swept it there and then they would have pushed because they don't have time for this. But what they wanted here is they wanted a better shorting price to be able to do a big move lower. Thus, they left these equal lows here, telling us we're not done down here. Okay, this is just a market maker sell model. And they, sorry, got a text. So this is just a market maker sell model. And they're just building up liquidity, basically. I mean, this is quite hard to explain. I'm going to try to think about how I can explain this even better. But the best logic I can give is they have more business down here. And if they didn't, they would just have continued the move earlier. Okay? Because they have liquidity here. So why wait? Right? If we wanted to go bullish, if that was the real move, we wouldn't have been waiting like this. Okay. I'm gonna make a more detailed video about that. I hope you got some value from this video, especially about liquidity and order blocks. I mean, this was quite a bad explanation, I must admit. But yeah, especially from this first setup, I very much hope that you learned some. Let's see, what more can we study? Well, that's the wrong one. We want to be at NQH. No. So one macro thing you can write down is that the London, after a liquidity build-up day, was very good. So backtest that if you want. We can also study one more setup that we had. This one. Yeah, we had this one right here, Monday. That was the best New York setup right there. So let's start at the hourly here. What do we leave down here? First off, we know on the higher time frame that our draw is that we get towards these lows, or this our order block, sorry. So we're not finished on the downside here on Monday, right? We have more liquidity to sweep, and we have an order block to tap into. So our bias is on the higher time frame is bearish. And what are we doing here ever since Sunday open? What are we doing when we leave these, when we get these trend line, fake breakout, we get these double tops? Retail, what are they doing? They're just shorting, right? Now, we also get this one here, top, whoops, which is a top. And then we get this move here, down move. So that's a double top as well. So we get, all we're doing here is just building up liquidity, and we have our higher time frame, lower draw, and we leave these equal lows here, which tells us, oh, you know, we're not done here. We have more business to do down here, right? So let's drop down into the 50-minute. That's how we know our bias, right? Liquidity build up, higher time frame draw is bearish, we leave equal lows, and we're leaving even more equal lows here. So much liquidity to be tapped on the downside. Now, at 9:30, what do we expect? We expect a manipulation move. And on this manipulation move, the banks are going to position themselves, and we are going to position ourselves. Now, why do we sweep this high here? Okay, sorry. Why do we sweep that specific high? Should that not be an order block? I mean, it's the last move up that we sweep liquidity with, you know? So the banks should have gone short here. Indeed, it is an order block, as you can see here, how after we validate it, we tap into it shortly. But what happens after that is that we we build up kind of so much liquidity towards this top here. So now it's valid for us to sweep this high because we have so much liquidity up here. Does that make sense? So an order block can become invalid or sweepable at least. It's not invalid. I mean, I'm gonna show you how it's reclaimed right there, right? But initially it's invalid because we build up so much liquidity towards these highs first, sweep, right? We sweep this high here. Now, when do we anticipate the move to begin? 9:30. So we don't get that. Instead, we get a high precisely below this one here. So now, and a move down afterwards there. So retail goes short right there. We get another double top right there. So now, basically, we get, it's this low right here. That's so close to that one that I believe triggers us to go up here. If, for example, we had just continued, build up liquidity down here, and then New York Open comes, then we wouldn't have had to sweep this because all the liquidity would have been here. But now we have liquidity up here from this one. So that's why we sweep that one, okay? Now, 9:30, we expect the manipulation to happen. Let's drop down on the time frame. We have liquidity here. And yeah, from this double top here, initially, the 5 minute. On the 5 minute, we also have double top. We got double top, double top, double top, double top, trend lines. Where do we have our trend lines? We got our trend lines. Yeah, this one was the one I was looking for. On the 1 minute, on the 5 minute, this is one. So we have liquidity, liquidity up here, up there, comes intermediate term high. But on the 1 minute, right at New York Open, something happens. Is this Monday? No, it's not. This is Monday. Something happens here, right? So we get this swing low there. We get that one, and we also get this. Sorry, I'm trying to find the time for New York Open. 9. Yeah, so this right here is a trendline sweep that happens initially on the 9:30. This one also takes trend lines from this one here, right? So a bunch of retail goes short there, stops there. So from 9:30 we get manipulation that triggers short or retail to short. So what does that result in? We get more liquidity up here. So that's something very typical. That the first move in the London session, no, New York, sorry, is manipulation towards the way we want to go later. Like the draw today was bearish, and we get the first candle bearish. But that's just to trick retail into going short. So then we take out their stops. So now they're down for the day. They just lost their house. Right, they're done. And where do we get our sweep? We get it right there. From this high all the way here, and these highs, and this trend line low. Right, basically just a ton of liquidity right there. Now, this one here would be the later on order block. Let's see if we tap this one. No, we haven't. So that's one to keep an eye out for, because we don't ever get a tap here back into it. So that's an untapped order block above all of this liquidity. So that's probably a target to look out for once the bull move starts. Now, this right here, I mean, it wasn't that clean, I can't argue. This was pretty much the setup that we had. Yeah, again, it's very precise. Stop would have been above there, so probably want to take on the micro, unless you want to risk 0.2%. I don't do that. But why the stop up above here? Well, that's the next order block that is relevant, right? Why? Well, this entire move here up was just to take out liquidity. So the banks just use this move to buy their shorts positions, right? So then it's they have orders left here, and because of that, it's illogical for us to take out that high, because they just want them. The real move is lower, and they have orders down here that will push the price down, basically. But yeah, down there, and the best target here would have been right down there. Those were the two best trade setups of the week. Okay. Now, what was the thing we wrote down here? We went into a liquidity building state after we hit our target. That was the liquidity that was relevant for the market maker buy model. So if this all here was our target, and we went into a liquidity building state after that, which we indubitably do, and we have an order block precisely above that, could this be a brilliant setup that we get later on in the week? Stops above this high there. I believe it certainly could. So please put an alarm right here. Check out, do we get some even more liquidity building around here? Basically, what I'm trying to say with this is the top of the market maker buy model that we have here. So they've been building up liquidity ever since that. Build up liquidity, build up liquidity, build up liquidity. We're gonna get move up there. We have CPI on Wednesday. So on CPI, we want to trade at 8:30 New York time, because that's when the manipulation move is likely to occur. Now remember, do we trade the CPI move? No. I mean, you can, but it's kind of hard to predict, I'm gonna be honest. Usually it is. I mean, last CPI was quite logical. You know what? Let's go look at last CPI, because it was a good setup. Here it is. Now, I showed you this in a previous video. We have our order block right here. Well, there it is. But why is that our order block? It's the part where the banks are buying, right? We take out this low. So this move down here, that's when the retail stops are taken and when the banks longs are entered. But do we have enough time to get it for the banks to get into their position? No. So it's likely that we move back into that and we get a bullish move. Now, CPI comes 8:30, boom. By the way, look at how the week was before CPI. Was just liquidity, build up liquidity, build up liquidity, boom, manipulation. Wednesday, that was the good start of that week. After that, we began to draw, so we can anticipate that. Weekly bias is move to, or weekly draw move to begin during Wednesday CPI. Before that, build liquidity. It seems quite logical to me. Now, back to CPI. Sorry to keep you waiting, sir. We get the manipulation move, right? Why? because this is the manipulation move. We want to go higher. That's our higher draw. Our higher draw here was it's the daily one that I showed you in the beginning of the video. That's the higher draw. So manipulation move is bearish. Now, what happens during this move? All the retail liquidity stops there, stops there, stops there, everywhere, right? Just crushed, right? We can take any of these trend lines. People go long, they have stops down here, okay? So on this move, the banks are buying, okay? What happens? We come into our order block, we have taken out liquidity, and the real move begins. We sweep CPI high. Was this a good setup? Let's look. So we seem to be getting a low, high, low, low, high, high. So we sweep liquidity there, build up liquidity there. Do we have some kind of bullish trend line that we sweep here? It seems that this one there. Well, I gotta look at it on the 1 minute to see more of the industry. But you can see how we get lows and we take out those lows in this order block, right? That you can't deny. Now you can also not deny how this is the last move down. This is the move where the banks are buying. Thus, we anticipate combined with this higher time frame order block. But this is our lower time frame order block, and we anticipate the banks to buy from here. Okay. So once we sweep this high, we do not anticipate that high to be broken. That's pretty clean trend line as well. I wonder, did we get respect here later on? Or did we just crash through it? This one. Yeah, we just crashed. Interesting. Yeah, but basically, sorry, I'm just wasting your time now. Expect manipulation during CPI, and then the real move will begin. Okay. Now, I'm not going to take more of your time because I'm getting a bit brain foggy here. But thank you for watching. I truly hope that you learned a lot because I try to make these as educational as possible. And good trading. What can we say about next week? Probably need some more liquidity. Well, if I'm going to predict precisely what happens, we build up liquidity till Wednesday to CPI, manipulation towards downside, time frame or block. 3, the real draw of the week begins, which is bullish. Okay. That's what I predict. So trade from Wednesday and onwards for best results. Because before that, it's just going to be building up liquidity. Okay. This is the order block yet again. Good luck. Good trading. Take notes during these lectures if you haven't, because that's how you learn. Also, analyze every single day, analyze your mistakes, and learn from that. That's how you learn. Good trading. Have a good day and night.